Stavros Tousios from M4Markets, and today I'm going to have a quick look at prices of gold and also dollar against the Swiss franc. I wanted to get on gold for two reasons. One, we have broken a while ago outside this descending channel, which means trend is to the upside in the medium term. We have somewhat of a trend over here to the upside, but as you can see, it's not accelerated any longer, okay? And that bottom side of this channel could be a rejection level. Similarly, we do have 3 consecutive RSI signals, okay? So momentum is slowing. It's actually a little bit, negative if we compare it to the prices. So with that said, and looking at how this move to the upside has so far developed, and using the Fibonacci tool, you can see that around 1835, there is a quite of an important level to consider. Equally, there is the 100% of the Fibonacci retracement, but the inverse version of it, which comes, the 100 comes around, so that should be the 2, excuse me, it's around the 1847, okay? And you have also 1825, so 25, 35, and 50 are all levels that we need to take into account, okay? Now, in the 1 hour chart over here, we can see that we have a peak, momentum, and prices together. That suggests that in the short term, the trend remains to the upside, because when you see prices and the momentum or other indicators moving at the same time, they converge. That means that there is some sort of directionality in the markets, okay? So there is potential for more upside here, and we're going to use the shorter term Fibonacci extension here. We're looking at around the 1842, 43, and then up to around 58 or so. Of course, that will depend on whether we can go and break back within this channel. But to me, that might not be the case any longer. Dollar Swiss franc now on the 4 hours again. We do see here that we have so many signals that they are popping on the chart. Even with the latest, of course, one not being that much of a case, we have still reached oversold territories, which suggests, well, perhaps that we might start moving up again. But is this level significant? Well, look, we are actually below the 79. And usually when that happens, we'll go to the 90. And the 90% is also down a swing low of the March 31st. Okay. And at the same time, let's not also ignore that here we have something of a wedge. Okay, now wedges come in different formations, obviously, but I wouldn't be surprised if we see one more leg to the downside for like the 92 to be taken out, which is an exact point of the 90, by the way. And from there, you know, start slowly to move up again. Now, do we get anything else on that 90? Well, it's close to the 61.8 Fibonacci extension of this downside leg. 91 actually 11, 91 11, and then you have the 91 and then the 92 towards the 38 makes a bit more of a thing, I guess. But equally, I want to use the inverse Fibonacci here to see what happens on that end, and look at what the 161 comes. So there is a cluster over here, and currently we are also below the 100%, okay, which is over here. This is a swing high that we'll have to pay attention to. 93.56. In case that is broken, we might start seeing this reversing. But for now, until that happens, we are most likely going to see prices remaining under pressure. Now, we cannot ignore this channel over here. Let's not forget we have to connect higher points and higher and lower points, so it doesn't make sense to connect it here. And we have actually received a rejection, okay? So this rejection either is going to turn up being a move to the upside, breaking above 93.50 or so, or we might get one more leg to the downside. Still, we could see a rejection lower down at around 92, and from there continue to the upside. But either way, the reversal, in my opinion, is very close.